Hello everyone. April 26th, Sunday. In Kiev, it's 11:38 in the morning. Bitcoin is trading at $78,164. If you watched yesterday's YouTube video, I mentioned that we have a Friday CME close around 78,100 and this zone is a magnet. So yesterday it was a magnet from above, now it's a magnet from below, but we're roughly in that area. Therefore, we can say that Bitcoin is trading in a balanced zone, right? Now let's pay attention to a few very important points. We'll be coming back to them later. First point, the 12-hour candles. Look at how many downside targets were missed. This suggests that Bitcoin is quite likely to head into this area, which is a range from $76,000 down to $67,000 sometime soon. But at the same time, we see that there's no overbought condition here. As a reminder, the bottom indicator shows overbought or oversold levels, and it's already there on the hourly candles. There's a strong overbought signal right here. This means growth isn't ruled out, but most likely this growth, won't be very strong. Especially on the 15-minute chart, as I'm marking here, we have a downside target around $77,800. So I think we'll pull back to somewhere around there now. And we'll talk about what happens after that in a moment. Again, on the 4-hour chart, as you can see, there are also missed downside targets, the nearest being around $74,700. Now let's start with the daily candles. We've noted that we have downside targets on the 12-hour and missed ones on the 4-hour. There's no overbought or oversold condition anywhere except on the hourly candles. So locally, a move towards 77,800 just seems likely. And now, let's switch to the monthly candles. Let's expand them to full screen. What do we see here? First of all, we see a strong oversold condition. By itself, it's no guarantee of a reversal, but if we get a break in this indicator, and if I zoom in, you'll see it's done that. But the month isn't closed yet. It's important how and where the April candle closes. If the April candle closes engulfing that big red February candle, we'll technically get a reversal, at least locally, targeting the base of the January candle at $87,500. If we don't get an engulfing of the February candle, we can assume quite logically that we've seen the maximum upward correction, or rather, Bitcoin has. There might be another spike, maybe a wick in May, right? But followed by a decline toward the 50-month moving average around $58,740. What is 58,740? This is the highest close in March 2021, after which a very deep correction followed, right? Then there was a false breakout of this level and it continued further down. For now, I don't know, I have no preference whether it will go further up or further down, but looking at the stock market, Bitcoin's growth doesn't look very likely. But the $87,500 to $88,000 level is clearly visible as a growth target on the weekly candles. Let's switch to those. On the monthly ones, we need to wait for the April candle to close. Let's clear what we were looking at here. Moving to the weekly candles, let's expand the chart. What do we see here? The most important candle on the weekly time frame is the February 2nd candle because it hit a new yearly low. None of the other candles hit a new low. Accordingly, the engulfing of this February 2nd weekly candle, which we are currently engulfing, though there are 15 hours left until the weekly close. If we engulf it, a growth target automatically appears in the area of the previous week's red candle base, which is around $87,000, and the 100-week average is right there at $87,700. So it aligns very well with the growth on the monthly candles toward the base of the January candle. So it actually looks quite good and doesn't contradict, let's say, the global decline, right? Our overbought, oversold indicator shows positive momentum here, which also supports growth. And there isn't a single reason to sell yet. On the contrary, reasons to buy are emerging. Now let's go back to the monthly candles and I'll show you what might happen with these targets on the 12-hour and 4-hour charts. Let's assume that the April monthly candle engulfs the February decline candle, because only then do we get solid, quality reasons for growth toward $87,000 or $88,000. We saw this engulfing at the end of April, but then we moved to hit the downside targets on the 12-hour and 4-hour charts. Now look at where the midpoint of the April candle is. $73,000, right? So it's a perfectly normal correction before continuing the growth to hit the middle of the April candle and then head toward $87,000. Now let's see what $73,000 represents. $73,000 is the zone of the nearest yellow targets. These are strong downside targets. There. And this zone on the daily candles, expanding the daily chart, is from that giant red candle on February 5th, after which we saw a low of $60,000, but the day has already closed with a green candle. So the engulfing of this downward candle, right, effectively signaled a trend reversal on the daily candles. Look, right here, well, let's just say there was a breakout attempt, but it turned out to be a fake out. It dropped significantly lower. The second breakout attempt, I marked it a bit wrong because it wasn't really an attempt. We only touched this candle with the shadows. Let me mark it with a check mark like this once more. Only the shadows were poking at it here. And here was a false breakout, but then it went way down, and the second breakout attempt was successful. That happened on April 13th, but we haven't returned to this 73,165 level. And let me remind you, this is the midpoint of the April candle's body. And accordingly, if we're heading toward $87,000 or $88,000, which is near the 200-day moving average, it's logical to see a move like this down here and then up there to hit the targets on the 4 and 12-hour charts and then continue higher. Then again, I don't know what the market will do. Nobody knows. But technical analysis suggests it's very wise to wait for the weekly candle close, to wait for a synchronized overbought condition on adjacent timeframes, preferably the higher ones. So, look, we have an overbought state on the hourly candles, but not on the 15-minute ones, nor on the 4-hour or 12-hour candles. Which means, well, it's just an isolated overbought signal. What we need is, say, for the daily and 12-hour candles to be overbought, or the 4-hour and 12-hour ones. This is to understand if the market is ready to drop to the $73,000 area, where if April engulfs the February candle, we'll look for a long entry point. For now, I suggest waiting for the weekly close first and then the monthly close. But in my opinion, the chances of reaching $87,000 or $88,000 look quite realistic, but only after a dip towards $73,000. Subscribe to the channel. Sending hugs and kisses. Until next time.